This is Joseph Giacobelli. I'm an analyst, investor, author, and the host of the Asia Climate Finance podcast, which is a philanthropic series dedicated to the promotion of knowledge and discussion on sustainable finance in Asia, from the perspective of the business of decarbonization and the energy transition in the region, which consumes about half of the world's energy and electricity. Please support this effort by liking and by subscribing to the podcast. Hello there, and welcome to the 22nd episode of the Asia Climate Finance podcast. Today we are discussing Asia transitional finance. Specifically, we're going to look at, the evolution, where are we at now, and then try to have a little bit of an outlook viewpoint in terms of what's going to happen in the future. It's a very complex subject, so we're only going to be talking about it from a 30,000 feet kind of perspective, but future episodes will include some of the nitty-gritties such as, carbon markets and some of the technologies, etc. To discuss the subject, we have Tasos Zavitsanakis, who is the head of Sustainable Finance Greater China, the UBS APAC Sustainable Finance Office. As always, his opinions are his own, do not represent in any size, form, shape whatsoever those of current or previous employers. Please enjoy the show. Good morning and good evening, Tasos. How are you?
Hi, Joseph. Doing very well and super excited to be here with you today. Because it's nice to speak again since you left from Hong Kong and you're enjoying your time in Portugal, but also because it's an exciting topic. We're coming at year end, and there's definitely a lot that happened and a lot that needs to happen in the next year. So thank you for having me.
So maybe we'll start first things first. Could you perhaps tell us a little bit about yourself, just your background? Both of us come from two beautiful countries in the Mediterranean and all that, but maybe a little bit of background, just very shortly.
Sure, thank you. So look, from as you mentioned, I have been with UBS quite some time. I'm the co-head of the APAC Sustainable Finance Office that we set up here almost 2 years ago as part of our initiatives and mandate to drive sustainability within all our client segments. Now, by background, I'm an electrical engineer, studied at Imperial College many years back, focusing on power and telecommunications. That was when I left Greece, effectively. I did almost get my first job in setting up wind farms in Greece after I graduated. But like most people, I would say, back at the time, I unfortunately was drawn into the financial services. With PwC, my first few projects were in carbon and carbon trading, doing a couple of projects with Lehman. I still remember the time. Unfortunately, we all know what happened there. And then it was one of those parallels, I would say, to things that are happening today, that post the financial crisis, there was much more focus of just building back. Now the narrative, and I'm quite pleased to see, is that there is a much more stronger narrative around the building back better. So almost 2-3 years ago, UBS, I was in London. Sorry, just to say, right? I was in London for many years. I only moved to Hong Kong almost 7 years ago, and 2 years ago, the bank asked me to head up our sustainability regulatory strategy in the APAC region. We were seeing an increasing demand from APAC regulators adopting European standards. And because of that, then subsequently the firm also gave me the privilege of covering more broadly all the initiatives that we're doing in the region, and particularly in Greater China.
Right. I don't want to make this into a UBS advertising slot where we don't do that, but I think it may be worth to just explaining a little bit, the structure. I mean, you are part of something called the UBS APAC Sustainable Finance Office. What is that exactly? I mean, you don't do equity research, or you don't do investment banking or wealth management. So what? Could you just tell us very briefly what this is all about?
Yeah, for sure. And I appreciate, right, like yourself, it shouldn't be the focus. Look, very, very briefly, I mean, we were set up in order to basically, what I would say, engage our clients, whether these are corporate or family offices or investors in our wealth management, to help them understand how to position themselves in sustainability, either from their own business perspective or because of their investment side. Sustainability is much more broader than just a product. Of course, you can position yourself, but you need to understand how you position and where the opportunities are. At the same time, so I would be spending most of my time in speaking with clients in the thematic areas of transition, around carbon markets, as well as impact. And at the same time, I'm there in order to support the firm's positioning in the region as one of the preferred suppliers of sustainability services.
That's great. I think it makes it a little bit clearer. And you mentioned transitional finance as well as sustainable finance. Is there a difference between the two? I mean, for those listeners who are not altogether familiar with this particular space, or is transitional finance part of sustainable finance? How do you define it?
It's an excellent question, right? I mean, I sometimes myself, because I talk about transition, and I typically in my head don't differentiate, but there is a small nuance from actually in the industry that's been forming up. Look, sustainable finance has been out there for quite a few decades, and good progress has been made. I think when we look at the numbers around sustainable finance and green financing, it has grown for over 100 times. I think in 2012, it was about 5 billion, and it's reached about 540 billion in 2021. Now, when we compare green finance and sustainable finance to this, is typically the focus area is that it's about mobilizing capital in green projects. Whereas transition finance, what it's trying to do is mobilize financing for the transition of carbon intensive or brown sectors. Mm-hmm. So when we look at the current regime, it's typically that financial institutions are not really encouraged, unfortunately, to finance those difficult sectors. Even if the projects typically that we have to finance are there and they are designed to reduce emissions. So, and just to give another acronym, because I'm talking about hard to abate sectors, right? I mean, what do we mean? We mean the sectors of aluminium, steel, cement, concrete, chemicals, transport. And these are typically industries where technological solutions are not available. At least they're not at scale. Mm-hmm. And if you look at their emission profile, I mean, they typically, these sectors make about 30 to 40% of the greenhouse gas emissions. So what's needed for these sectors, and this is some statistics right from the emissions gap report that was issued this year, is that we would need to transfer there about 4 to 6 trillion per year, right? And that's a big number. And I think that's where transition finance come in. Actually, we had the G20 in Bali earlier in the month. There was a definition there that the leaders did approve a transition finance framework. And also, there is a lot of work that's been done under the Net Zero Banking Alliance in order to define transition finances much more specifically and what is it trying to achieve.
That's great. Not only great for listeners, but also great for myself. There's a little bit of knowledge gap there at my end as well. How would you generalize, very, very broadly, the state of sustainable finance in Asia, in the Asia region, in 10 seconds? No, just kidding. But maybe we can break it down into either geographies and or financial assets, looking at equities, bonds, carbon, lending, etc.
Yeah, look, it is a good question, and if you don't mind, Joseph, I'll say how I typically look at sustainable finance in a location, right? And what are the elements that need to be put in place in order to create an enabling sustainable finance environment? Because the products themselves are just not the enable. It's typically what I would say. It's the outcome. It's the how you do it. And the other thing that I always think of is that we do need to acknowledge that APAC did start from a lower base of adoption. I mean, European Union, right, has had almost 10, 20 years of experience, especially through the emission trading system, right, that they have been trying to get to a more sustainable outcome with the corporates. The other thing that we need to recognize, right, when we look at is that we need to think about that APAC does have the highest needs. It's about APAC produce about 50% of the greenhouse gas emissions globally. So with this backdrop in mind, right, I think it is important to look at the sustainable finance ecosystem in 4 ways. And I would say the first one is the corporate adoption and the investor appetite. There is the regulatory regime. There's a product innovation, you did ask. But one thing that's typical, most of the times a little bit forgotten, is capacity building and the experience of people. I think those 4 elements can help making enabling sustainable finance ecosystem. And if okay with you, I'll just take a couple of words across these 4 areas, right? And where do I see them in Asia, right? So if we look at the corporates, right, and the investors, I mean, there's definitely been a change in attitude as well from investors and corporates. Investors are increasingly, for example, have moved their mindset in terms of they asking why should I do it, but they're constantly seeking ways of how they can invest and engage in a more impactful way in sustainability. And Asian corporates, which typically we hear there's not enough green assets in Asian, but I do have one indication, right? I mean, if I look at the corporate disclosures from the CDP, the Carbon Disclosure Program, as it's called, right, where corporates disclose their carbon emissions, there's now almost 3,800 companies that are reporting, and that was an increase, and that's in 2021. That was an increase of about 30% from 2020. And we are increasingly seeing APAC corporates willing to give more information, and sometimes that information is actually even more from what we see in the US. It's still not where the EU is, but there is also that interesting point. Now, from a regulatory perspective, I would say there's 3 things that we're seeing very good traction: adoption of international standards. The regulators across most of the APAC regions have looked at disclosures, labeling, prudential regulations for stress testing for banks, as well as greenwashing. If I just look at Hong Kong and Singapore, let's say more which are a little bit closer to us, they've also both regulators have issued their green and sustainability linked grant schemes. That's to help corporates enable them to take steps towards green and sustainable finance and issuance. I can go if you want in anything in more detail, but I think from a product perspective and on the greenwashing, that's another important element. We're seeing already, we saw actions from regulators over the last couple of years, this year in particular. And one thing that I've noticed is that as standards last year, there was a lot of discussion around ESG integration, right? ESG integration has moved out from being it used to be good practice. It's become the norm today. So standards are every year evolving. There is no, it's like the goalpost keeps on moving. So I don't know if there is. I can cover a little bit the products and the increase there, unless there is anything specific that you would like me to go in more detail in the disclosures.
I think we're going to cover a few of the asset classes in a sec, but I wanted to, because you mentioned earlier the G20, and at the same time concurrently there was COP27 taking place. I myself published a very short op-ed, basically with the main message of saying, hey, by the way, India and China are kind of two of the key players for this, and both of them were very preeminent in both the G20 and COP27 discussions when it comes to the energy transition, sustainability, etc. But looking at recent developments like these, what are your key takeaways personally from these two recent events? Obviously related to climate finance, but perhaps focusing on the finance side of things for Asia, and skipping the incredibly complicated discussion over politics and geopolitics, which we don't really talk about in the podcast because I'm not qualified. So so there was a long-winded question. So the recent developments and key takeaways on these two events from the finance side in Asia.
Look, I'll tell you a little bit, right? I mean, and how many, to be honest, specific commitments with a finance objective came out of this COP is probably the thing that everyone was a little bit disappointed, right? And we need to acknowledge that. I mean, there was not the progress that everyone would have hoped for. But we still, there were a couple of achievements, and we should still celebrate them, because we need to recognize that this is a complicated topic. As you say, there's multiple stakeholders and priorities. And certainly when we compare COP27 to COP26, right, there's much more geopolitical tensions that are in play now. Yes. So, and I think even though we would have loved, even as call us bankers or financial institutions, to have more clarity where the money is going to go, I think that was a little bit taken away from the politics that you mentioned. Nevertheless, right, I think my key takeaways, right, and is the following: that there is still commitment to the 1.5 degrees. I think that's quite important, because the fact that we still have 1.5 degrees, there were discussions about trying and reduce the wording around that, because people are feeling that we will overshoot, therefore why should I have a 1.5 degrees? I think it's important it's still there. And the reason why I link that, Joseph, to the finance is that the more that we keep that 1.5, that means more finance needs to flow, right? If we do allow ourselves to go to 2.5 degrees, naturally this will just result for less finance, at least in the next decade, right? So that's why it's an important thing that we still have that ambition. From a specific finance perspective, the most biggest achievement that everyone is talking is about what's loss and damage, and what does that for our audience, right? Loss and damage typically refers to how developed nations can support developing countries that are particularly vulnerable to the adverse impacts of climate change. Now, beautiful words, and a great commitment, but fundamentally there's still not a lot of meat on the bone there. The decision was that, yes, we want to have loss and damage, but we're going to set up a committee that will have to advise on how to operationalize that, and also to agree how much and who will be financing this particular loss and damage outcome. And that all will have to be presented in COP28. So it's let's wait and see kind of thing, a little bit kicking the can down the road. Nevertheless, some numbers around that is that the report did state that there needs to be about 5.6 trillion up to 2030 if we want to help achieving that, bridging the gap between developing and developed. Now, the other thing that I thought was quite useful, right, is the conversation around: are we moving fast enough? Is there is a debt trap, as it's called, and just to give a little bit of an indication, right, is that when it comes to energy transition, is that given what we're seeing right now with the increased and elevated energy prices, there is a recognition of this crisis, and therefore we need to accelerate how much capital need to flow, right? Especially in renewable energy, and that's put in the order of about 4 trillion per year until 2030, and that would allow us to reach net zero emissions by 2050. Now, there is no one challenge that, and what was called the debt trap, and that is from the term was coined by the Pakistan Prime Minister, and the challenge there is that we have quite a lot of increase in interest rates, and that will naturally leave some of the developing countries in particular who will struggle to fund their climate resilience. Now, what does that mean, right? It means that we need to find innovative new models that probably will require private and public financing to come together. We typically refer to these models as blended finance, right? Now, these mechanisms will have to be developed, and a lot of philanthropic capital also will need to come into play. Because if we look historically, there was a commitment that there needed to be about 100 billion per year by 2020, that the developed needed to move to the developing economy. That has not happened. And therefore, the UN final as well report, right? I mean, stressed that issue that we will be facing, because if we don't address that, there will be significant problems around adaptation down the line. And therefore, what the UN asked is that we need to have a much more credible and predictable plan on how we need to double the funding. We need to be much more transparent, and countries need to be much more transparent of how the finance is going to be channeled. And we need to make sure that the calls, any kind of claims that countries have done around adaptation finance, they need to be fulfilled. Will there be a legal commitment to that? I think that's something that we still need to wait and see.
Right. So we've got these. So Tasos, we've got these global diplomatic events where some commitments are made. There's a lot of there's some commitments, but there's also a lot of blah 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 stuff that is very difficult to achieve. But when we look at stuff on the ground, if we look at some of the, and you mentioned earlier that Asia is 50% of global emissions, and it's also, as you know, almost 50% of primary energy consumption and almost 50% of electric power generation. So it's really the absolutely key region. If we look at this region and some of the key players, do you have any kind of particular opinions on how they are advancing? And you can mention as few or as many as you want, but I guess some of the ones that really need to be mentioned because of their sheer size are places like China, India, Indonesia, etc. So do you have any specific kind of views on how these countries are advancing the cause, so to speak?
Thank you. That's a very good question, Joseph, and indeed a lot of claims, but still a lot of work that needs to be done there, right? So, look, if you don't mind, I'll give the example of China. So, China committed to peaking their carbon emissions before 2030 and achieving carbon neutrality before 2060. Now, this is a very high ambition. because China is still developing, right? And they've got a growing urbanization and I would say a relatively young industrial infrastructure, especially when you look at the different plants that they have. So what does that mean? That means is that there will be quite a lot of what we call lock-in emissions or stranded assets. And that is if this new growth that they have over the next decade is not equipped with low carbon technologies. So if you, as we said in the beginning, right? I mean, the biggest challenge that we're facing is hard to abate sectors, and in particular where technologies are not available, and that is where most of the challenge in China sits, right? And India, and I would say in most of the Asian countries, right? Because their infrastructure is just, we don't still have, call it, enough renewable energy penetration. As simple as that. So the reliance on coal is going to be much more difficult for these countries to replace and displace with renewable energy. So if I look in particular for China, right, I mean, they have the hard to abate sectors like steel accounts for 17%, cement and concrete 13%, chemicals another 13%. These are big numbers, right? And most of the industrial process supporting these sectors depend on what I was saying previously, fossil fuels, right? And the electricity mainly comes from coal. And coal accounts for about 58% of China's total power generation. So you can imagine, right? I mean, when we talk about transition for a country like that, and this is typical profile, as I said, in most Asian countries, it's going to be extremely difficult. So the decarbonization for this will be extremely challenging. And that's why the whole push around transition finance. We need to enable and be able to channel money also to these kind of industries, as long as, and that's the key principle of transition. And that was what came out of G20 that I mentioned previously, right? It needs to be credible, i.e., it needs to be feasible, it needs to be able to demonstrate where money is going to be spent in which technologies, over what time frames, and in particular, what kind of abatement or reduction of carbon is expected to be achieved through these solutions. Mm-hmm. And another key aspect, which again people forget, it's also about just transition as well. We shouldn't forget about the social outcomes from any transition. Yes, you can switch from coal into renewable energy, but you also need to make sure that you take into account what switching out of coal, what that means for the broader society, where you're implementing a solution of switching out and switching into something that's more low carbon and more efficient.
No, that's great. Any other key markets that we should be aware of in terms of what they're doing, where they're heading, etc., in the Asia Pacific region?
I mean, it's a big region, right? I do particularly, yes, I do particularly see good momentum in markets like Indonesia and Malaysia. Mm-hmm. And the reason I will use this particular two, Thailand is another interesting one, right? I'll give you the reasons why I'm suggesting these regions, right? Mm-hmm. Is because of course, the energy and renewable energy infrastructure is not at the level that it should be. Mm-hmm. The other reason is that I've seen, I mean, as I mentioned to you, right, I spent quite a lot of time in carbon markets. And I see that Indonesia wants to develop a carbon market. I see Malaysia wants to develop a carbon market. Thailand has done a lot of focus in capacity building, which was the other dimension that I previously mentioned, mm-hmm. that I mentioned in the beginning, right? capacity building is quite important for me, because what we need to recognize is that real change in the real economy, and by that I mean corporates, will happen by the workforces. The banking system can price risk and direct capital in the most efficient manner. We're good capital. We're good capital allocators. That's what we've always done. But in this particular case, it's no longer about just channeling capital in the most efficient way. The economy and the problem that we have to solve is who is also going to be implement and spend that money in the most efficient way. We will need to see real impact, real emission reductions in order to achieve what we have to achieve. And I think that problem is very different to the one that we had to face 10, 15 years ago. Now, Indonesia and Malaysia said they have the carbon markets. And the other thing to notice, right, in terms of developments, right, is once you start having mechanisms like that, is that you demonstrate and you're sending a signal that carbon pricing will soon be following. Singapore has already kind of thought about those mechanisms as another interesting, and I would say the most interesting place in the Asia region, where they are trying to attract a lot of talent and explore new ideas. But fundamentally, they have made commitments around carbon price, and that's super important because they help the market understand forward what is the forward carbon price. And then corporates can make planning decisions, right? And finance. And that's, I would hope to see more countries in Asia communicating.
I think that's a massively important subject. And then funny enough, in past podcasts, the whole carbon market thing kind of keeps on popping up all by its little self. It was not necessarily the center of the conversation, but it just keeps on popping up. So the carbon market is a financial asset which is evolving, slowly growing up. What is your take, specifically on the carbon markets in Asia? I mean, you mentioned the importance of them, but what about the actual evolution? I mean, are we close to have something that some people would call real, quote unquote, or are we still kind of the building stage? And I'm also talking about that in the context of Hong Kong Stock Exchange, which recently has made some carbon markets related announcements.
Super question, right? Look, and this is a statement that doesn't necessarily represent my firm, right? But and I hope that's okay, right? I'm a firm believer of a global carbon price. I'm not a firm believer of a unified carbon price, of one price, but I think carbon markets will be important in order to drive change. Carbon needs to be a cost, and only when it becomes a cost, it will be taken seriously. Just like you price your raw materials, I see not a reason why you shouldn't be pricing carbon. We live under a carbon budget constrained world. I read somewhere, Joseph, an analysis that if we continue at the level that we are, and that's a little bit scary, right? We have only 8 years left based on the carbon budget. This for me is if it's true, it's scary. And it was it wasn't, I just don't remember where the source of that is, but it was a credible source. So look, carbon pricing now in APAC is evolving slowly. We've already got a carbon price scheme in China, in Japan, in New Zealand, in Singapore, in South Korea. And increasingly, we're seeing that carbon pricing will start weighing into investment decisions. and it will start affect valuation premiums. And what I mean by that is that investors will increasingly be asking corporates of, this is great, thank you for your financial planning. What assumptions have you made around carbon price? Because only then investors will start understanding whether a company has truly integrated the impact of climate into their financial decision and their financial planning. Now, the carbon markets, I mean, you mentioned Hong Kong. It's great, right? I mean, it's brilliant to see Core Climate and the Hong Kong Exchange being launched. I think it will be very helpful because it will. The whole premise of it is to help channel capital in carbon solutions, in carbon projects in China. We still need to see. It's still a little bit. It's in its infancy. I think based on some numbers that I have seen, there is about 20 participants on the model on the platform right now. Maybe if you give me a second, I can probably try and look at some more numbers to help in the conversation. So there's about 20 participants.
As you know,
and there's been about 400,000 tons of carbon credits that have been transacted. Now, it's still early stage. So the problem with carbon markets is that, and in particular voluntary carbon markets, is that there's a lack of transparency. There is lack of transparency, there's lack of integrity, and there's lack of what we call high quality projects. I appreciate, I mean, you said, I mean, this is not about us as an institution, right? But we are making advancements in order to understand this market much better. We think quality is very important. And that's why we also want to find means to identify, have tools in place that we can actually see how carbon credit is of high quality so that we can offer it to our clients down the line. We're not there yet. But what we do need, and everyone needs, is a little bit of more regulatory guidance. I think regulators right now are a little bit where they were with the crypto space almost 3 years ago. I remember SFC here in Hong Kong was a bit skeptical about should we regulate the crypto or not. At some point, they realized that we do need to regulate it because we need to protect investors. I think I wouldn't be surprised if voluntary carbon space goes through some similar evolution, that yes, we need to allow it to grow. As it grows, we start understanding it. Initiatives like what Hong Kong Exchange has done with Core Climate and what CIX has done in Singapore is part of understanding the market. When the market becomes scalable enough, and I'm a true believer, it will have to become, because it's going to be part of the solution for any corporate, right? Then probably that regulation will come in. Apologies for the long-winded answer there.
No, that's great. So, I mean, so far we kind of had a very excellent view of what's going on in sustainable finance in Asia. I think your conclusion, if I can put words in your mouth, is that the progress is good, it's evolving. We've still got a long way to go, but definitely we're on the right path for places, especially like China, which is a major actor in this particular movie, and also the fact that carbon markets is pretty much the same situation where it's kind of growing up, it's evolving, it's improving all the time. So based on that, and please do correct me if I kind of misquoted you in any way, but in terms of actual opportunities, so for corporates or for financial investors, including capital markets investors, perhaps even direct investors, people investing in projects directly. Where do you think that they should be looking for the opportunities in the Asia Pacific region?
Another excellent question, and also timely from the point that right, we look at equity markets and fixed income markets. I mean, and everyone is a little bit sitting on the sideline, right, in order to see how things will evolve. Look, I think, and linking it back to the corporate transition, there will need to be money that needs to flow into the technologies of the future, the emerging technologies, the technologies that will enable corporates, right, to transition. And as I said, some of them don't exist in commercial scale. Some of them might be even in the R&D, in the research and development phase, right? So these type of solutions will have to be scaled up. So we are seeing that there is an increased interest in thematic strategies, right? And that's why it's around clean energy, water, food supply, sustainable agriculture. And when I look from a product launch perspective this year, there were also other several themes that started to emerge, and that was nature and biodiversity, for example. And that was along the themes that I mentioned, right, around climate theme or food security. A very interesting one is around circular economy as well. Now, where do you find opportunities, though, in these spaces? Actually, they're in the private equity space and what we call the impact investing space, which is increasingly becoming more interesting in order to capture this opportunity. And the reason being is that typically in private equity, right, is where they will remain at the forefront of the financing innovation, and it allows you, right, to capture long-term growth opportunities, which is the type of technologies that I said, right? I mean, they're typically in the private space. Now, the other reason is that when we look at historically years, when you have years where there's been some kind of decline in public markets, putting fresh capital into private markets has historically proven a rewarding strategy over the long term. So this would be the thematics and the products, right? And how do you get access? But in particular, if I can give some more color in the two themes of the transition to green energy, right, or food security, which I think they're two interesting one, again, for our audience, right? If we look at the green energy, right, the estimates from the International Energy Association put the number on how much money we need for clean energy, which probably I mentioned previously, actually, again, is around 4 trillion annually by 2030. And the indication of why more money will flow is that we already had the US Inflation Reduction Act. That was 369 billion. And we also have the renewable energy power for the EU strategy, and that is about 300 billion of euros. So there is that, I would say, political and national commitment towards green energy. This will naturally attract more capital and investment. On the food security side, on the other side, we have a couple of key trends, right, that to support the thesis. The population that we expect, the global population is expected to grow about 9.3 billion, I think, by 2050.
Right.
And we need to increase the food production to support that by 50 to 60%, according some numbers from the UN FAO. Now, we've also seen that the recent shocks, right, in food prices, supply chains. We had COVID. We now have the Russia and Ukraine crisis. All this will naturally lead down to the fact that there needs to be more investment in innovation in food and agricultural technologies. And that would be around improving and protecting crop yield, farming efficiency and resilience, or innovation on how food arrives from production to the dinner table, right? And to close that, right, if I look at the there are some numbers that we've been tracking from where does venture capital money flow, right? And I'll quote a few numbers from PitchBook that I think is quite telling, right? If I look at agri-tech, just by mid-2022, it raised about 5.7 billion, and it's expected to reach about 10 billion by year end. And food tech has already raised about 18 billion by Q3 of 2022. And it's all the stuff that probably people are hearing. It's indoor farming, agricultural biotech. We have alternative proteins, bioengineered foods. I think these are all the interesting areas when it comes to food security.
That's great. So basically, clean tech or clean energy technologies, as well as food tech, would be two of the areas, principally through private equity. If I summarize it in
it's great. It's great, Joseph. It's great to have you, right? I could have said all that in 2 sentences.
Then it would have been really, really boring because people would not understand the context. There's no. I think it's really important to also look at food, because it is an integral part of everything that is going on. So we discussed sustainable finance / transitional finance. We discussed all the recent developments emanating from G20, COP27. We talked quite a bit about the carbon markets and the evolution there, and finally we talked about opportunities. So if I can kind of put your back against the wall, and these again are absolutely your own personal opinions and do not represent anybody else's opinions, past or present employers. But what's your general outlook? I mean, you've been doing this for a while. I mean, do you have a good feeling on the outlook of sustainable finance in Asia? And yeah, that's my first question. Do you have a good feeling on the outlook?
Yeah, look, I'll remain optimistic, and the reason I'm remaining optimistic is the following. And I use the analogies I said of when we had the financial crisis, and I will take it back to my own, let's say, a little bit story, right? That when I started, the whole idea was there was very interestingly back at the end of in the beginning of the 2000s, the energy transition, climate, sustainability were very heavily discussed. There is an amazing paper that I've always referred to, and it was the first one that also inspired me, which was the economics of climate, and it was published by Lehman's. Now, the narrative is very similar to the one that we have today, but then it makes you wonder of why that narrative was not implemented as much. We went through the financial crisis, we lost the narrative, but that doesn't mean that we lost the science. And we're actually at a much better place today than we were 10, 15 years ago, because the data cannot lie now. We've got another extra 15 years of data to demonstrate that what we're doing right now will not allow us to have a planet by the end of the century. Now, we look at it, we feel it, right? Everywhere we are. And Asia is unfortunately going to be the place that's going to be affected most. So it's in their self-interest for every government and national jurisdiction to drive this, I would say, quite fast. Money needs to flow. Yes, money does need to flow. But there is the areas that we said, energy transition, transportation, hard to abate. This is going to be most of them will have to be financed here in APAC. Now, the thing that is missing, though, is that governments do need to be much more transparent in their forward-looking plans. We need to have much better understanding by country what is the sectoral pathways of how they plan to get to net zero, provide guidance around carbon price, provide tax incentives, and give guidance around targets. So just like we're asking corporates to provide short-term, medium-term, long-term targets of how they're going to get there, and investors expect that, governments, that should be an expectation from governments. So I know it's a more complicated, probably topic, and it becomes more complicated because it becomes political. But if you're expecting the corporates in your jurisdiction to operate in a certain way, as a government, you need to be able also to give support to these corporates in order to implement and support you in your own national contribution plans.
I think your point is really interesting, and I go back to, I mean, this is all about Asia, but if we take the European context, and this can be a discussion. I mean, you can absolutely disagree, or totally agree or totally disagree with this point, which is, the EU is really 27 people at going to a restaurant and trying to order the same thing, although they all got different dietary requirements and like different kinds of food, etc. So it makes it very, very difficult to find the food that everybody can agree with. But if there's one area where the EU surprisingly and shockingly has made progress is on the energy transition, right? It's been too slow, and it's been emphasized by the recent political events, Putin's invasion of Ukraine, etc. But in terms of where the EU was, 10 years ago, 20 years ago, where the EU is today, there's been an enormous amount of progress. So there is something, despite all the different governments, and there's been a lot of government change the last 10 or 20 years in the EU. At least we've made some advances, and I think that we kind of seeing the same situation in Asia, where you've got these very different countries facing different economic and other challenges, but the progress is still there. So the trajectory is still there. The difference is that the EU has been a lot more consistent in its support of the energy transition. I don't know if you agree with this statement or not.
I think that's a fair. It's it's one of those things, right? Centralized versus federated decision-making approaches, right? EU, whether people like it as being too bureaucratic, policy-driven, but they made a commitment, as you said, 15 years ago or whenever they did, and they stuck to it. And I have to be honest. I mean, personal view, right? And I'm not supporting it based on data or anything. But you look at the EU, where everyone is now saying, "Oh, you have not done enough," or "You're a But actually, the whole crisis, right, accelerated what they wanted to do, and they're doing it, and they will probably do it in a very painful manner over the next year, and potentially over the following year. But I was just reading today, right, that they already, for example, reduced their gas demand by a quarter. Now, if they wouldn't have done that a year ago, they were actually planning to take the time a little bit more.
Yeah.
So that for me is an achievement.
Yes, and we can draw some kind of conclusions as well of if I were to, and I'm not putting words into your mouth because it's just my own personal opinion, that there are some countries in the Asia-Pacific region which have been relatively consistent in terms of their decarbonization, net zero, etc., policies and structures and mechanisms, places like obviously China, which got a lot of flack for not doing enough, but I think they've done quite a bit. And then you've got some countries which are slowly but surely coming into being a little bit more consistent, like Australia, for example. And I think that's really key. Couple of final questions. One is, you mentioned that the current opportunity for investors, for corporations, etc., is around about clean energy technologies as well as food tech. What about over the next 28 years in this region? Do you see any other areas that corporates or capital markets investors should be looking at?
No, that's a very good point, right? I mean, the big market that is talked quite a lot, of course, is hydrogen. The use of hydrogen needs to be scaled significantly, right, in terms of capacity. But right now, the challenge that we have is that to develop green hydrogen, as it's called, right, because producing hydrogen also is an energy-intensive process. So the only way that you can make a difference is if you're producing green hydrogen. But to produce green hydrogen, you need to scale up significantly your renewable energy capacity. So it's a chicken and egg situation. Then we also need to find ways to be able to transfer hydrogen. These mechanisms don't exist right now. I mean, there's not many shipping containers out there that can transfer, probably none that can transfer hydrogen. And it's a little bit, that's why it's becoming a chicken and egg, because also the market, right, and the customer needs to show the demand. If I start looking at the hard-to-abate sectors, take, as I said, maritime, or take aviation, how many which are hard-to-abate sectors, hydrogen will be an enabler for them to decarbonize, but there's not many companies that they have committed themselves in order to use hydrogen. Right now, they're going into the middle solutions, which is much more, let's use sustainable aviation fuels in order to achieve our outcomes. So hydrogen is one solution. The other interesting one is that we will see increased carbon capture and storage type of solutions, because, as I mentioned previously, right, there is unfortunately still stock of coal-fired plants that will be put online. Now, and I hope I'm not mistaken in saying that, is that as part of, we talk a lot about taxonomies and activities, right, of what activities are allowed to be in the energy transition. Plants which will have integrated carbon capture and storage solutions will be allowed to continue operating until the end of their lifetime. So these I would say are the most technologies like direct air carbon capture and storage. I wouldn't be surprised. I mean, there aren't any plants like that. I mean, we've only got them in Europe, and I think there is one in the US. But if we start looking at carbon removal, so pure carbon removal, right, not the nature-based solutions type of things, I wouldn't be surprised that every country, right, if I'm looking at the 10, 15-year outlook, will have to have a plant like that in order to support their decarbonization efforts. We will need, unfortunately, more technical solutions like this type of engineering miracles to remove carbon from the atmosphere.
No, that's great. Just to wrap everything up, can I ask you for some final thoughts to wrap up today's conversation and discussion, Tasos?
Yeah, if you don't mind, there is one thing that we also I'm seeing quite a lot of conversations that because of the problems that we have today, which is energy security, right? For security, it's like I need food for the winter, I need energy for the winter. But then sometimes what we forget is that we need to protect our nature and our biodiversity for the decades ahead. And a lot of emphasis has always been put on the COP27s, right? But we don't look at what there is another COP, which is COP15 around the nature and biodiversity, the one that happened actually in Montreal in November. And the reason I'm bringing it up as an attention is that it's private capital also needs to flow much more into closing the biodiversity financing gap. And right now, that private capital only makes about 17% of what flows into nature-based solutions. And that number of both public and private, just to give an indication again, right? We need to double that by 2025 to approximately 390 billion per year. And that's right now, it's about 150 billion. So I do want to mention that because there's literally less, I would say, discussions about and how do we do that? What are the natural capital solutions that need to be out there that can be investable and also give the same, let's say, financial returns that probably investors expect to have? And that's something that I have not seen at scale and a little bit saddens me.
No, that's a very, very important point. Tasos, I just want to give you a big thank you for participating in the Asia Climate Finance podcast today. It's been a really, really interesting conversation. I think there's at least half a dozen areas that we need to have a much more in-depth chat, one of them being the carbon markets. So, hopefully we can have you on in 2023 to talk about some of these very, very important issues.
I would love to do that, Joseph. And look, I appreciate that we covered a broad area of things. But I think it's important to appreciate, right, that it is a broad agenda.
Yes.
And that's why we just shouldn't lose, let's call it, our faith. We are moving. Could we move faster? Yes, we could move faster, but we could also move slower. So we should always acknowledge that and be proud for the achievements, whether they're small or big.
I absolutely agree with you, Tasos. Once again, thank you very, very much for your time today and all of your insights.
And thank you for driving this very topical discussions.
Thanks.
I appreciate
it. Thank you, Tasos. Thanks.
Thank you, Joseph.
I hope you did enjoy this episode of the Asia Climate Finance podcast. I would really appreciate any feedback, topic ideas, etc. My contact is in the show notes. Thank you.